The Trump win, Trump trade activity, earnings wrap-up, and global market interdependencies. Investors have been closely eyeing movements on U.S. stocks, tariffs and trade, crypto, and their own long-term investment approach. In this episode, we delve into how retail investors like yourselves can consider several factors in the current market environment and potential policy changes. Welcome to Investing Explained, where we make your money work harder for you. With the current global context, retail investors could adopt a more diversified, cautious approach, staying informed about policy changes and sector-specific trends that could impact the broader market. Now, what can you use and what potential strategies can you look at based on your risk tolerance and market views? We'll show you. Hear directly from our trading representative. Take it away, Juncheong.
Herein and Olivia. Tracking macroeconomic conditions will provide you with a bird's eye view of the market performance and also allow you to take a step back before you continue strategizing for the upcoming new year. Open your Moomoo app, go to Markets, Calendar, click on Economic Data. Here's the important part. Tap Add to Calendar to subscribe. Doing this will allow you to track economic indicators in a more timely manner, particularly related to the labor market. It is also worthy to note that market participants and federal officials tend to pay more attention to the NFP figures, and the correlation between employment and the stock market cannot be simply interpreted as positive or negative. To answer this rather complex problem, it's also essential you use these tools to get a better understanding of the US macroeconomic cycle before using more in-depth tools.
Excellent. Next, with high inflation, the Federal Reserve's stance on interest rates will likely remain a critical factor for markets. Rising rates can impact borrowing costs, valuations, and consumer spending, all of which influence stock prices. Sectors like technology, which are also sensitive to interest rates, may face more volatility, so investors may want to monitor rate trends and focus on companies with strong cash flows and lower debt. What are some indicators to consider for these, Juncheong?
Let's delve into the market position overview, which is also known as the position cost distribution or float, shares that are available for trading by the public. The function presents the number of shares held at different prices by investors. Go to US, select a stock, then chart. Double tap on the chart, click on the toolbox icon and tap Market Position Overview. Let's pause right here. It's important you educate yourselves on what the different colors, green, red, gray, and blue mean for your profitability or loss-making positions. Its position cost and current stock price. And now the low or high levels of concentrations that indicates costs and resistance level related to the stock price. It's important to keep track of activities using the Market Position Overview, as well as the US Stock Analyst Ratings under Companies, then Summary. Check out our previous episodes for more in-depth pathways on this for the US market.
The federal debt and budget deficit are also expected to be central issues with this election win, especially as tax cuts and spending proposals are in progress. High deficit levels might eventually lead to increased borrowing costs, pressuring markets and prompting investors to consider sectors that can withstand potential government spending cuts or tax changes. These could mean sector-specific opportunities, defensive assets like consumer staples, healthcare, or utilities, which present more potential stability, or gold and other commodities that might also serve as hedges against inflation or currency fluctuation. Another area, cryptocurrency regulation. With Trump's potential pro-crypto stance, the sector might see a boost, as we've seen already when, for example, Bitcoin hit an all-time high. However, regulatory developments can still introduce risks, especially as the sector remains highly speculative. With this context and analysis in mind, Juncheong, what tools can investors look at to gain exposure with less individual stock risk?
Exactly, Olivia. Investors could possibly look for sector-focused ETFs or index funds to gain this exposure with less individual stock risk. Go to Markets, click on ETFs right here. Here you have a list of index and thematic ETFs, as well as tools to explore. But with so many choices, how do you evaluate them? First, you may choose based on mainstream indices, sectors, and leverage. Index ETFs, also known as market index ETFs, are generally relatively low cost and easy to understand investment tools which could be appropriate for long and short-term investors. If you want to quickly find an index ETF, visit this section and use the filter to look at ETFs that meet your criteria based on underlying index and leverage. Second, the heat map feature for ETFs. This tool categorizes ETFs into 3 dimensions: asset class, sector, and region. The heat map visually displays the overall performance of different ETF types with different color intensity indicating performance strength. By clicking on the sector module, you can view a detailed list of ETFs within that sector. And lastly, we have covered leverage and inverse ETFs before. You may filter right here in the section according to the featured list or themes or industries such as gold ETFs. These lists can quickly help you gauge current market sentiment for overall market and various sectors. You should always seek to understand a company's strategies and components and align them with your investment goals and risk tolerance. Utilize tools on Moomoo to gain insights into ETF products, market trends, and potential opportunities, especially in the US market. You got this! Happy planning for the new year as it's right around the corner. Trust that this was helpful for you. With that, back to you, Olivia.
As our active retail investors, you should continue to stay cautious, consider portfolio diversification, and invest only what you can afford to lose. Now, 2025 is just around the corner, and we're almost into our final episode for the year soon. Now, what are you doing to start pursuing your new financial goals? Stay tuned for the next episode and more on the US market updates. We care for your financial well-being, so follow us. For more videos like these, remember to like and subscribe. Let's get to work, everyone. Have a profitable day.